now turn to changes in the budget in the UK and the impact on racing and betting. Tom Waterhouse joining us from Waterhouse VC. Tom, welcome.
Thank you very much. Thanks, Andrew.
So, yeah, they released the budget last week. Now, there was a fear Treasury was going to increase the 15% tax rate paid by bookmakers on racing, and they didn't do that. But they have made other changes. What are the impacts?
Yeah, so sports betting tax increase from 15 to 25, gaming's gone up to 40%. So it's a significant increase. Racing stayed the same at the 15%. They also paid the 10% levy on horse racing. And obviously the bookmakers on course in the UK get the carve out that they don't have to pay the 15%. But yeah, it's a significant increase. You're seeing increases in gambling taxes across the world, actually. Obviously the US has dramatically increased taxes across many of the states. Australia has been an increasing tax cycle for over the last 10 years. Brazil the same, and also in Europe. So it's probably not unexpected, and what probably leads to is the same as what has happened in other markets, consolidation. So we've spoken to a number of the bookmakers over the last week, and they're looking to sell betting shops, sell their online businesses to those larger scale operators. And you'd see operators like Fred Doan, who owns Betfred, obviously Flutter, which owns Paddy Power. They're going to be the natural consolidators, and yeah, for the smaller operators, it's much, much tougher, and yeah, it's just the way it's been in these regulated markets.
Yeah, you mentioned Paddy Power. In fact, Paddy Power and Betfair owner Flutter, they're warning that that budget move to hike gambling tax. In fact, so remote gaming duty paid on online gaming betting will rise from 21 to 40%. I mean, that's a huge hike, isn't it?
No.
And they're saying that could potentially hit earnings by hundreds of millions of pounds.
Yeah, well, you've seen that there's been, what would it be, $10 billion off their share price over the last few months. That's a combination of factors. Obviously, India closing down, the prediction markets in the US, and these increasing taxes in many of their markets. But it's this cycle, and I guess we sort of pivoted 6.5 years ago to the suppliers of the industry, because we saw these headwinds in the operators. Australia, for instance, you had the main operator, Sportsbet, growing revenues and profit 30% year on year for a period of sort of 8 years, and now it's not. They don't have any of that growth. It's sort of going backwards, and sort of across that many of the regulated markets, because taxes are increasing, and it's becoming tougher and tougher.
Tom, let's refocus on what we're seeing here locally. I see a report revealing 14% of Australian racing bets now go to illegal offshore operators.
Yeah, look, Australia's a little bit different. So obviously the increasing tax is a headwind for the large operators, but in the UK and many of the markets, you can offer a full product suite. So in the UK, you've got horse racing, you've got sport, you've got in-play, and you've got online casino. The same as in Brazil, many parts of Europe, but in Australia you only have horse racing, sport before the game starts, and no online casino. So Australia has high tax, similar to those other markets, but it also doesn't have product parity with the offshore operators. So many people don't realise they're betting with illegal offshore operators, and Australia is very ripe for these black market operators, because there's so much product they can offer our onshore customers that they're looking for. So there's big casino leakage, there's big in-play sports betting leakage, and Australia, even though it's illegal, there isn't the same payment blocking that you see in other parts of the world, such as the US, China now, and obviously in Brazil. So Australia's got a big problem with this black market, firstly from a player protection point of view, but also a taxation. The government's missing out on tax that they would normally collect from land-based casinos and also from the online sports operators, and it's a big issue here in Australia.
So what trends are you seeing there? Would you expect that number to increase as time goes on?
No, it's dramatically increasing, especially since COVID, because there's this online adoption. So it was natural 10 years ago that if you wanted to have like a flutter at the casino, you would go to Star, or in Melbourne in Crown or Jupiter's, where people now can access those sites, whether it's through a VPN, and some of them not even a VPN, can access them from their home or work, and can play online slots and can quite easily make payments. And so it's a big issue here for Australia, and I'm sure the regulators are starting to really focus on it, because it's growing at a rapid rate. And you can see that obviously for many of those online casino operators, from studies that have been, that Australia is the 5th most transacted currency. So it's amazing that Australia, with all these overseas operators, can be such a high level of transactions. So it's a worrying issue and something that needs to be fixed.
Tom, what are your expectations for 2026, particularly, I guess, in that space with there's still a lot of political pressure here in Australia to increase gambling regulations? Do you think that's going to come to pass?
Yeah, I think globally you're in a cycle of increasing tax, increasing regulation, and I think it makes sense in many cases for governments or regulators to do that. You just don't want it where it's dripping out the other end and you're missing out on the taxation and the regulation and the consumer protection. So Australia and many regulated markets, I think you're in a cycle of that increasing tax, increasing awareness of customers, harm minimisation measures in place. It's just the balancing of act of making sure you keep the customers and the turnover and the taxation on shore.